Ladies and gentlemen, good day and welcome to Sastasundar Ventures Limited Q2 and H1 FY26 earnings conference call. As a reminder, all participants' line will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. Now I hand over to call to Ms. Prachi Ambre, MUFG in time from Investor Relation team. Thank you and over to you, ma'am.
Good afternoon, everyone, and welcome to Q2 and H1 FY26 earnings conference call of Sastasundar Ventures Limited. Today on the call, we have Mr. Banwarilal Mittal, Founder and Executive Chairman, and Mr. Lokesh Agarwal, Chief Financial Officer, to provide insights on the operational and financial performance. Before we begin the call, I would like to give a short disclaimer. This call may contain some of the forward-looking statements which are completely based upon our beliefs and expectations as of today. The statements are not a guarantee of our future performance and involve unforeseen risks and uncertainties. With this, I would like to hand over the call to Mittal sir for his opening remarks. Over to you, sir. Thank you.
Good afternoon, ladies and gentlemen. On behalf of Sastasundar Ventures Limited, I, Mr. B.L. Mittal, along with our CFO, Mr. Lokesh Agarwal, and Company Secretary, extend a warm welcome to all participants on our Q2 and half-year ended financial year 26 financial results discussion call. I hope you all have had an opportunity to review our financial results and our investor presentation, both of which have been uploaded on the stock exchanges and website of the company. We began Q2 financial year 26 with positive progress. Our revenue operation stood in this quarter at 307.9 crore, up 16.9% year-on-year and 10.6% quarter-on-quarter, reflecting our disciplined execution and steady momentum. Gross profit was rupees 22.9 crore, up 34.2% year-on-year and 9.8% quarter-on-quarter. Our gross profit margin expanded by 100 basis points to 7.5% this quarter as compared to 6.5% in Q2 financial year 25. We continue to advance our mission of building a profitable, scalable and sustainable healthcare distribution platform across B2B and B2C, anchored in capital efficiency, automation and targeted geographic expansion. Both Retailer Shakti and Sastasundar B2C remain our core growth engines, delivering Q2 revenue in Retailer Shakti 267.8 crore and in Sastasundar 39.4 crore respectively. This reflects year-on-year growth of approximately 13% in Retailer Shakti and around 60% in B2C, backed by disciplined vendor sourcing, streamlined procurement and automated fulfillment operations. The strengthened mix is enhancing order density and repeat engagement, supporting a durable scale-up across our platform. We are preparing for profitable growth. Retailer Shakti is expected to be breakeven at EBITDA level in March 26 quarter, that is next quarter, and 1% EBITDA positive for next full year. While Sastasundar is expected to have contribution margin positive next year, that is covering up our entire cost except tech cost and fixed cost, corporate cost and advertisement expenses. We plan to invest in Sastasundar B2C, AI tech development less than our treasury income. So next year we should be PAT positive company, considering EBITDA margin, positive margin from Retailer Shakti and considering contribution positive margin from Sastasundar, considering treasury income deducted by all our fixed costs, all our depreciations, we should be a PAT positive company. Our purpose is to build a great leading enterprise that uses innovation, empathy, and technology to make healthcare affordable for every income group, accessible to every town and village, and personalized for every individual's unique health needs. We have two unique platforms, one for B2C, that is Sastasundar app, and one for B2B, that is Retailer Shakti. We are among the very few companies capable of creating a scalable, sustainable, and purpose-driven platform business with high efficient capital utilization. Just for giving you the purpose of capital utilization. Some data for our healthcare platform business in our material subsidiary Sastasundar Healthcare Limited till date, we raised total capital of rupees 322 crores. That includes capital contribution by our company Sastasundar Venture Limited, out of which we have returned the sum in the form of buyback rupees 100 crore to Mitsubishi Corporation. Therefore, net capital raised is 222 crores. The free treasury in the same Sastasundar Healthcare Limited is rupees 445 crore apart from business assets. So the net treasury is almost double to the capital raise and the business is separately running very well. This clearly demonstrates our efficiency in capital utilization. The total treasury in Sastasundar Healthcare Limited is rupees 445 crore and other fellow subsidiary companies rupees 120 crore, totaling to rupees 565 crore. This is apart from 100 crores given for buyback. So we are fully capitalized, capital-based company to fund our growth. Our business model is highly efficient, enabling strong operating leverages, robust cash flow generation, and potentially return on capital employed at 50 to 60% as scale over the next 4 or 5 years. This is an opportunity to build impactful business with innovation, which drive both purpose and profitability. This quarter, we worked in a very focused agenda. I'll narrate those agenda. First agenda was to simplify corporate structure. We have completed buyback of part holding of Mitsubishi Corporation. Now, our holding in Sastasundar Healthcare Limited has increased from 72.1% to 78.89%. This will facilitate a scheme for merger and demerger with holding company, and we are preparing to present a scheme to our board for consideration at the financial year end 31st March 2026. Second agenda is to accelerate growth. We have given the growth map in our presentation, and that covers our planning to prepare for growth, including building high-tech stack, fulfillment capacity, AI tools for our customers, product expansion, category expansion, and market expansion. So we have checked out the growth plans in all 4 corners of the work. Very interesting third point is the launch of Jito brand. We have successfully launched our brand Jito to give our customers choice to choose the alternative brand to save cost up to 60% and getting encouraging response. Jito will be further strengthened by our own private label Jito brand. This on one hand will save cost of customers and on the other hand will expand our own margin. Fourth is automation. We are in the process to implement automation at our FC and logistics, and this will expand our fulfillment capacity by double and reduce our cost. Fifth is very important, Sastasundar Health and Happiness Podcast. We launch our YouTube channel Sastasundar Health and Happiness Podcast to give honest information about health. This has attracted good interest from reputed doctors, and they are now participating. We have started getting revenues by building partnership with our pharmaceutical companies. We are working on unique offering for quick health with doctor consultation to quick diagnosis to quick delivery of medicine. Our network of health buddies and pharmacy of retailer Shakti will be very helpful in local support system. This will include the AI tools of counseling and data-driven analysis. We have this unique opportunity before us to reach 140 crore Indians to provide them healthcare solutions with the motto of Satayu Bhav, 100 years healthy living, using technology and Seva Bhav, that is empathy. Thank you for your continued support. With this, I conclude my remarks and open the floor for questions. Thank you.
Thank you very much. We will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Mr. Vivek Gupta from Star Investment. Please go ahead. Mr. Vivek, we have unmute your lines.
Hello.
Yes, Vivek ji.
Yes, sorry, my voice was not audible. So, at the segment level, when do you expect Retailer Shakti, which is B2B, and Sastasundar, that is B2C, to turn the EBITDA positive on a sustainable basis? And also, what key operational or scale milestones in each segment will be the main triggers for the profitability?
So in Retailer Shakti, we are already running at a break-even, and this break-even will further be strengthened by next quarter. So next quarter it will be EBITDA positive Retailer Shakti segment-wise, and next year we should be generating 1% EBITDA at Retailer Shakti. And so this is what about Retailer Shakti. Sastasundar, we will be the margin positive company next year. Margin, I mean contribution margin that covers all our variable cost, and we will continue to invest in Sastasundar for 2-3 years. So we can say in the year 28-29 financial year, we should be EBITDA positive in Sastasundar.
Okay, sir. So I have a follow-up on this. So the B2C segment has delivered around 60% year-on-year growth in the quarter two. Could you break down this growth between new customer acquisitions, increase in order frequency, and also the improvement in ticket size? And also, sir, how should we think about this sustainability of this particular growth trajectory over the next 4 to 6 quarters?
So Sastasundar, as you are aware, it was our old brand. So I am not very much happy with the growth because these are already our customers, just switched on to the new customers. So the growth will continue because when we handed over to Flipkart, the revenue per year was around 500 crore rupees in Sastasundar app. So that same customer base will come very soon, and I have hope to achieve this 500 crore in next 18 months time. So we should be same as we have handed over to Flipkart in 18 months time. So this growth will continue because all those customers exist, they just need to come back. But since B2C customer takes some amount of time before coming to the new app, their time is taking. But this is a great story, and we hope to have 500 crore annual run rate in Sastasundar in next 18 months.
Okay, sir. So, what is the revenue potential from existing warehouses? Like, what is your internal outlook or aspiration for revenue growth and gross margin expansion over FY26 and FY27? And like, is there any broad guidance range?
So, as you must appreciate that we are in a platform business, whereby quarter to quarter guidance or year to year guidance will be very difficult, and this is a very highly scalable model. But as I have given the guidance for 29 to 30 years old, I mean, I won't say guidance, but for the figure for which we are working for is 2930, and 2930 we are working for a revenue of 6,000 crores, 4,000 in Retailer Shakti and around 2,000 in B2C Sastasundar. And this would generate around 4 to 5% EBITDA in the year 2930. So this is what we are building for next 5 years.
Okay, sir. That really helps. And thank you for taking my question. All the best for the future quarters.
Yeah, thank you.
Thank you. The next question is from the line of Vilina Jain from Perpetuity Ventures. Please go ahead.
Hi, sir. So, sir, can you elaborate on the Retailer Shakti growth? Like, what's our outlook there? Where do we see this growing for the next 2-3 years?
No, next 2-3 years it will grow in a very good speed. So by 2030, if we are planning to reach by around 4,000 crore revenue company, so next 2-3 years we must be growing by more than 30% compounding. But this is in a making stage. We are a startup company, so you must appreciate that some quarter to quarter or year by year the growth may reset. But two things are very, very important, that we will grow profitably and we will grow rapidly. So we have planned from all corners, as we have given the complete map of our growth acceleration program in our presentation. So if you read that, we have given the point by point about our preparation. and we are very excited about to build this company. And I'm sure this will again be a record-setting company that with this such a least capital, we have made a company of a large size.
Absolutely, sir. Sir, in terms of profitability, you mentioned that we are already at break-even in retailer Shakti, and next quarter, like Q4, would be 1% margin. Is my understanding right, sir?
The Q4 will be almost break-even. We are working still, but next year, next full year, that is financial year 25-26, will be 1% EBITDA positive margin company for retailers.
Oh, okay, sir. Okay. And so currently, how many retailers do we have?
We have more than 40,000 retailers in our retailers.
And how do we see this number growing from here? Like, what is our target addition per month for retailers?
So month by month, it's very difficult for us to give, but as we grow by 30-40%, so it should be by 30-40%. So we can say that right now, say we have 40,000 retailers. So next year we must be adding around 15,000 more retailers. So by next year end, we should be having 55,000 retailers.
And for the next 2-3 years, we can expect 15,000 addition for the retailer Shakti business.
Sure, there's no doubt about it.
Okay. And sir, lastly, on the working capital bit, so in the last 2 quarters, we have been able to maintain good working capital as a percentage of sales of around 5-6%. So is this a sustainable number? What is your view on this?
You see, we are a platform company. So if you ask me what is my personal ambition, so technically and fundamentally we should be a negative working capital company. Why there should be working capital in a platform company? So these are purely sustainable, and we will continue to work it to further reduce. So it will be sustainable.
So sir, next year also this will be like around 6% only then, next 2 years?
Yes, it should be around 6%. But again, I would state that, we are in a building stage. So suppose we own new warehouse starts in Udaipur, new warehouse starts in Lucknow. So, I mean, if we look this company for next 5 years, we will be around 20 days time and maybe less than that. But year by year or quarter to quarter or some date, some adjustment may happen. Because you must appreciate the fact that we are building a very, very large company with very limited resources in terms of capital. And with that challenge, there may be some adjustment somewhere. So if you are looking our company and going as an investor with us, then be mindful of the fact that there may be some adjustment at some point of time, and you please keep those factors into mind that this is a great journey with a great ambition. And so if you are a code traveler, little bit hiccups maybe here and there. We are a very startup company. So with that mind, I would be very happy if you go with us.
Okay, sir. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Abhishek from Perpetuity. Please go ahead.
Sir, thanks for taking my question. My question first is around Sastasundar. You said you were not happy with the scale because you wanted it to get back to that 500 crore number ASAP. If you look at this quarter, you kind of hit like a 40 crore kind of a number for the quarter. So you're already at 160 crores. So when you are saying in 18 months you will reach that 500 crore kind of a number, is it the fourth quarter of FY27 you hit the 125 crore number, or is it on a full year basis you think in FY25 in FY27 you will be able to do 500 odd crores?
No, I'm targeting the last quarter of next year. So in 26, last quarter, should be able to cross 100 crores turnover from Sastasundar.
That's fourth quarter FY27, you mean to say, right?
Because these customers already exist, Mr. Abhishek. It's just the time that we bring them on the app, and B2C customer have their space to come back. But those should come back. I mean, I'm looking forward to welcome them again. They had an experience of Sastasundar, and they had our delivery system. They had faith in our brand. So we should be same. Why not? In next 18 months, we should be same at the time we handed over to Flipkart. That is what it should be.
And sir, what is the current number of health buddies? Like this current scale, we are how many health buddies? 200, 300 at this point of time?
Current health is at 260. So,
okay. So for 260, we have hit that 40 crore kind of a run rate on a quarterly basis.
yes.
And what's the number you have in mind for getting to that 100 crore plus run rate on a quarterly basis?
So another 100 we will add, so 360.
So 260 health buddies, another 100 added in the next
So
18
those are
odd months.
continuous basis adding is going on. So if we set the target of next 18 months from here, so by March 2026 we should be having 360 health buddies.
360 health buddies. And so technically you're talking about a crore odd kind of a sale per health buddy, right? To hit that 400 crore kind of a number. Is that the fair assumption?
Yes, crore per health buddy per year. You are right.
That's the kind of number you can possibly hit with the with your current franchise.
Yes.
So on retailer Shakti, it's been a phenomenal growth for us. Almost like 270 odd crore per month, which is like 90 odd crore number in the last from their virtually like 10 odd crores 18 odd months back. So this exponential journey, from what we understand currently, is largely in the eastern part of India, right? It's like 80-85% would be the West Bengal and east and to some extent from your NCR region. So when you are looking at your journey over the next 3 years, or say FY30, when talking about a 4,000 odd crore number in retailer Shakti, what is the kind of geographical split you would have in mind? And at that point of time, how much would West Bengal, in your view, be of this 4,000 odd crores?
So if we target from Calcutta, Baraipur, West Bengal warehouse, we are going to Odisha, Bihar. So those are the geography. Jharkhand, we are doing already something. We will further expand. And then Chhattisgarh, we are going from Calcutta warehouse. From Noida warehouse, we will build 2 warehouses for our strategic location, one in Lucknow and one in Udaipur. So from 3 warehouses, we will cover the entire northern India. That is West Rajasthan, West UP from Lucknow, and then from Noida, this Rajasthan area, Jaipur side, entire Haryana, Uttarakhand. So these all the northern states will be covered by, and this will be covered from Calcutta. So another 2 warehouses will be building, one in Lucknow and one in Udaipur. Noida warehouse, we are doubling our capacity in terms of both building new warehouse and automation. Baraipur, we have already implemented the automation. The capacity is double. It should be triple in next 3 months' time. So that is what the preparation is, and it is very now. We are in the platform business. This year we were a bit slow for 2-3 reasons. One was obviously automation. We wanted to do it automation, and then second was to set up a profitable model. So you see the retailer Shakti margin expansion in gross margin, and then you will see in the next quarter also. So now the trajectory is for profitable growth. It's not a case burning growth, and grow in a very high speed. And we are fully prepared from every angle, from tech stack to building fulfillment center to building team and to building our customer base, and most important, to provide a strong competitive value proposition to the customers. So that is what we are doing, and both our products, Sastasundar app and Retailer Shakti, have been accepted by the customers. So those are proven models. There is nothing new. And I must also tell all investors that at the time of giving the Flipkart, the Sastasundar app was valued at around 1100 crores. And from 18 months now, we expect it to be the same company. So we have created the same kind of value by investing 150 crores. That is the power of digital asset. And this Sastasundar podcast, I also informed to the investors, has been remarkably successful. And I am also happy to inform you that it's already generating revenue. So these are the digital assets that once they generate revenue from every angle, then money flows inside like anything. So this is an innovation which completely cares of the complete ecosystem, from B2B to B2C to the customer engagement to the doctor's engagement to the health data and the AI application. So all these biggie companies, Google, Microsoft, or for that matter, AI, ChatGPT, they all are coming with a fantastic backroom AI stronghold technology, and we are the distributor. So we are not only the distributor of medicine and healthcare products, but we will be the distribution of AI product also. So our job is to utilize this backbone of these bigger companies and to reach out to the millions of the Indian customers who want to use the AI in their own life from where they stand today. So our job is to provide them that unique Indianized version of that, as I already mentioned, that two motto, and it is Satayu Bhav, 100 years healthy living. And I would request all of you to watch our Sastasundar Health and Happiness podcast. We have recently started a 2-minute video on daily basis that how 100 years life is possible with good, and that internally we are targeting that everything we do is with technology and Seva Bhav. Seva Bhav stands for empathy. So that is, a very unique model of Health Buddy and Retailer Shakti partnering with retailers, that while we provide the technology-based services on a platform, at last level we have the empathy, that Seva Bhav, that human touch. So it's a very unique opportunity for all of us to implement this model on ground so that we can change the life of 140 crores Indians for good.
Thank you. The next question is from the line of Swara Panushali from RD Care Investment. Please go ahead.
Hello. Am I audible?
Yes, yes.
Yeah, thank you for the opportunity. Actually, I have the question regarding on the retailer app that is currently under testing. Could you please elaborate on the rollout plan in terms of timing and phasing across key markets, the extent of inventory days reduction, and you're targeting the pharmacy level, right? And how you expect this to translate into higher wallet share, retention, and order stickiness from your partner pharmacies?
Yes, that is very interesting product our tech team is building. So we have already given them app to connect with our inventory to the retailer Shakti. Now the problem of retailers is utilization of that technology at their own level. So if you notice that these small pharmacies note down in a physical diary what are the orders they need to take. So we are developing that app that will automate their reorder process, and that will be connected with retailer Shakti. So once they note down those requirement into their app instead of their local physical diary, the order will be placed in automatically in retailer Shakti, and that localized app for retailers will enable them to manage their inventory very scientifically and very efficiently. So we expect rollout in next 6 months time. So in April 2026 we start to roll out in a beta phase, and then another 2 months time to stabilize. So say May, June it should be fully integrated with retailer Shakti to make the order process very smooth and automated from the retailer pharmacy.
Okay, got it, sir. Thank you. And sir, since you do not intend to pursue a cash burn or a credit-heavy growth model and will scale largely without incremental capital allocation over the next 2 to 3 years, what is the expected annual capex requirement on technology and AI, warehouse automation and satellite locations? And do you foresee all this being comfortably funded through internal accruals, or is there any scenario where you would consider raising external capital?
No, we don't plan any external capital. As I mentioned in my opening remark, that we have a treasury of around 400 crores. So around 40-50 crores must be the treasury income. That is what we planned in our technology extension and our warehouse extension. So as I already explained that from next year, after deducting all our expenses on technology, advertisement and building Sastasundar app, still we should be the paid positive company because our treasury income will take care of that. So that is how we have structured, and I don't find any need for capital for at least next 5 years.
Okay, got it, sir. Thank you. All the best.
Thank you.
Thank you. The next question is from the line of Mr. Dheeraj Shah from RJ Investment. Please go ahead.
Thank you for the opportunity, sir. So I just have a couple of questions. So, firstly, with the operations currently, as you can see, concentrated in east and north of India, and penetration still relatively low in key states such as West Bengal and perhaps Uttar Pradesh. So, could you maybe elaborate on your roadmap for strengthening presence in these existing markets, and maybe share the timeline and strategy for entering into West and South India? That would be helpful.
So Western and South India, we are not hurried. At Western and South India, we don't have any strategy right now. We are not looking to those markets for next 3 years. Right now, we will focus on eastern part of the states, West Bengal, Bihar, Jharkhand, Chhattisgarh, and northeastern 7 states. And from Delhi, NCR, we will cover fully Rajasthan, Uttar Pradesh, Haryana, Jharkhand. So these are the states we will focus on. And we have tested the model in some part of the geographies of these 15-20 states, and this covers almost 50% market of the India. And once we build a company very systematically, then we need to focus on a particular geography. So we take this example, and from west we will go very scientifically, right? We are building a warehouse in Udaipur. So from Udaipur we will enter into Ahmedabad silently and build some business, see that how market it fits, and then from Ahmedabad we move to interior of the Gujarat. So that is how our strategy is going bit by bit rather than going in a stock manner. We don't believe that anything should be say hard for logistic framework on ground, where anything unnecessarily hurriedly will make our capital burn more and more. That for that we are not fit for the growth required for case one. So that is how we have strategized. But I am pretty sure that the growth we have planned in these states are more than enough to build a very large company with a profitable company.
Understood. Sir, on a different note, as you broaden your assortment beyond medicines and basic wellness, you're also going into personal care, beauty, surgical products, nutrition and nutraceuticals, pet care and private labels as well, G2 generics and OTC lines. So what is maybe the current revenue and profit contribution of these newer categories, and how do their margin profile are compared with the core portfolio? And maybe if you could shed some light on category mix and how the margins would be uplifting, like how would you target that for next 3 to 5 years? If you could shed some light on that.
Yes, definitely. So we have done a very deep study. So if you notice why we selected these categories, then the common thing you must have noticed that these are like medicine only, very light weighted, because our logistic is set for lightweight category. So we don't handle the heavyweight category. That is number one. And number two, the packaging of personal care, beauty care are like medicine only in a very light care. And the third part is that we want to utilize our strong logistic capabilities, warehousing capabilities, and our tech capabilities to distribute the product which are in the nature of, which are like the medicine only. And since we already have the customer base, large customer base, so we can utilize the same network, same technology, same our warehouse capacities. And the margins are also very good in these categories. And since our retention margin will be very high, because our fixed cost remains same, we will utilize our same warehouse, same logistics, same technology. There is no additional cost for backup arrangement. We just need to buy and sell the product. And we are very particular choosy about this, and branding very choosy. So I mean, like Jito, we have branded separately on a app so that customers don't confuse. In the beauty care segment and personal care segment, we are launching a separate channel in Sastasundar app called Mohabbat. It's a love for beauty concept. So it will be a separate channel to engage the customers so that they don't confuse with pharmaceutical product. And then this will be very gross margin increasing product for our company, because other costs remain same. There is no cost incremental for technology, there is no cost incremental for logistics, no cost incremental for warehouse. And we are also planning to offer a very unique solution to the companies in these categories to provide them software as service or warehouse as service. So that is again another area that, suppose there is a company which is dealing in beauty care. We can provide them the entire distribution system, utilizing our software capabilities for retailer Shakti, utilizing our logistics and warehouses. In that model, even the inventory will be taken care of by them. We don't need to invest in inventory. And these are purely a service angle which we rent out our capacity building to the similar kind of companies which are facing challenges of distribution. India is a country which is, facing a strong challenge in building distribution capabilities, and these companies in the category of personal care, beauty care, surgical care are facing the same challenges. And we are a company which can provide them a integrated solution at one place, and that supply chain will be data driven. We can provide them the last mile data very efficiently, and can give them a very good value for service as a customer, as a service provider. So these are different models which we know, which we have the leverage capacity in our platform business, and we are very hopeful to build a very large company out of these utilities.
Understood, sir. Understood. Thank you for answering my question, and all the best for the future quarters.
Thank you. The next question is from the line of Ms. Preeti Agarwal from SK Associates. Please go ahead.
Yeah, thank you so much for the opportunity. I would like to know that on the technology and AI front, could you walk us through a few concrete use cases where AI and automation are, already being developed or will be developed soon, and what kind of measurable impact on service levels or cost levels and margin improvements you expect from these initiatives over the next couple of years?
Very good question. I like, we debate this in our company at a large extent. I must appreciate that you have asked a very relevant question that everybody talks about AI, everybody talks about development of AI, but at the end of the day, what is the use case? So first, the use case I will walk through that how we think and how we planned it out. The first use case is the reducing the cost in automation part. So as I said earlier that our warehouse, say in West Bengal warehouse, with a very little investment, we have been able to make the capacity by 3 times without employing further people. So we put up some or own level on each medicine script. So we have to employ people to put up that. Now that has been recognized by AI, and that process becomes automated. Second is the picking. So picking is also through an AI application. The recognition of order with the recognition of physical stores is now an AI application. So then the logistics. So sorting of the route and sorting of the particular rate is again by the AI application. So these have been significantly reducing the manpower requirement. Call centers, the requirement of the automated call monitoring has been able to reduce our manpower by half. So these are the practical applications. Then coding. Coding we are able to make it automated by AI coding, so the cost is again reduced. So these are the known things which we have implemented, and now I am coming to the Sastasundar app. How the customer will be benefited. So customer, I must tell you the story of a thermometer that it took 100 years time for people to accept thermometer as a right kind of temperature measuring machine. So adoption at a customer journey is a very, very long term process, and people are habituated only by a long term process. So we are aware about the fact. So developing the technology, application of the technology, then about using of the technology by consumers are two different and vast different positions. So what we will plan to do is, first developing the counseling tool, so that we have the large working from the large AI companies who have developed the AI medical knowledge and medical informative analysis synchronization of the knowledge in a backend wall. Now we will translate into counseling variables. So we have the data of medicine, we have the data of diagnostics. So there can be a counseling tool which can provide the valuable insight by speaking in their own language to regional language to the customer. Say you have bought this medicine, these are the problems in your medicine. So you again go to the doctor and check. And next time when you go to the doctor, these tools have already in their backend their own diagnostic report and their own record of health records. So they can brief to the doctors that these are the medicine he is taking, these are the reports he is taking, and then can answer the doctor's query very efficiently. So as a customer, as a patient, I may not remember, I may not be in a state of the condition to remember. But we want to travel this journey from the point where customer stands, and to move on as the customer gets habituated and customer gets educated about all those applications. So we are preparing ourselves with the factful in mind that these are very wonderful things. This can change the people's life. I was telling about the Jito clinic. Now we have opened one very good Jito physical clinic in our warehouse Baripur to provide services to warehouse employees and to outside also. Now the doctor consultation, I tell you, the online doctor consultation was not very much successful in India because of the fact that the big briefing takes a problem. As a customer, I am not habituated to measure my own blood pressure, my own blood sugar, and then to brief to the doctor online. So we have recruited a nurse there, and the nurse is equipped with AI tools. So whatever customer is telling to nurse, nurse is listening, and then AI tool is also listening. Now the both analytical report goes to the doctor, and then there is a bigger screen where the doctor comes after listening to patient, nurse, and then AI tools. So there is a right kind of briefing. Then the prescription is generated. Then the prescription also verifies automatically. So where are the lacunas? And then we supply them generic medicine in the brand of the Jito. And then the diagnostic happen. So these things are interlinked and connected. But I'm very mindful of the fact that reaching to the 100 crore, 40 crores Indians, it will take lot of time, and we have to simplify the process. And therefore, I am very much excited about this health PD model. And I am already mentioned that there are technologies, and along with technology, there has to be seva bhav, empathy. Because if we integrate both these things, then only the Indian service sector will be successful at the last mile. So that is what, but very good question is coming to my heart. We also internally debate that after talking so many heavy things, what is the ground impact on ground? But yes, this is a good start, and after 5 years, we will see the substantially change on the ground.
Yes, absolutely, sir. That was very helpful. And on curated Jito generic channel, what adoption are you seeing among doctors, pharmacists, and consumers, and how much of the prescription or order base this has shifted to Jito generic so far? And like what penetration levels are you targeting in the medium term across chronic and acute categories?
You see, the Jito, we have a very different approach. I tell you about the India story. So in India, around 100 crores people are not into medicine net. So out of 100 crores people who are not into medicine net, I estimate that 30 crores is suffering from one of the chronic, either from obesity, diabetic, blood pressure. So there are choices, as I've seen my father also. They don't go to the government hospitals because they take one full day time. So their dihadi, mazuri, or one day wages is lost. So the 1 day wage comparable cost in India is now 700-800 rupees. That is lot waste. And diabetes takes time to create the complication. So they think that it is right. So we are making this product Jito all for 100 crores people who feel their dignity is compromised once they go to the government hospitals. They have to stand in queue. They are not treated well, and their whole day is wasted. So there is a question of money, A, then there is a question of time, B, because they have to spend one full day. And then the time is a cost in terms of their full day wages. And there is a question of dignity, because they have to stand in a large queue. So the Jito model we are bringing for those 100 crore people, that hey, either you sit at home, take online consultation, or give our diagnostic and we supply you the Jito medicine at a very affordable cost sitting at home. So your time is saved, your dignity is saved, and your money is saved. Second is that the Jito clinic where you can visit and can give your all vitals, can have a consultation with doctor with assisted AI tool and assisted nurse, can have your diagnostic at a very standard rate, almost 50% to the all bigger companies, and can get all your medicine at proper. If this model, these two models cover 99% problems at a primary care center. So in India, if you see that 100 crore people need health care, 99 things can be treated at home or treated at clinic. It's a very systematic intervention of the medical health. They don't need to go to hospitals. They don't need to go to stand in queue. So we save time, we save money, and we provide them with a dignified approach. So this is what the conceptually Jito is doing. We have launched just 2 months back, and we are getting around 20 lakhs per month order in Jito. And with this integrated solution of doctor, generic medicine, and diagnostic collection center format, we have estimated that for a diabetic patient, we will be able to treat them as low as 200 rupees per month. That includes doctor, diagnostic, and Jito medicine. That is how we want to reach 200 crore people. This is not a story of another substitute of the same customer base of those 30-40 crores people who can afford But this is for the people for 100 crores, and this 100 crores, I must tell you, all of you, is that is changing landscape. Now they are getting money in their bank account, in their wife's name, in their mother's name, and around 10 to 20% of that, I mean 500 to 600 rupees every month, they are ready to spend on their healthcare, and they are more now powerful. They are more eager to check who is the diabetic, who is the blood pressure, and what is the problematica. So they want to improve their life. So that is how the GISO will address to those bottom-down approach who are right now facing challenges in terms of managing their health very well. So this is how our mission is.
Understood, sir. That was very helpful. Thank you so much.
Thank you. The next question is from the line of Mr. Vivek Gupta from Star Investment. Please go ahead.
Yeah, hi sir. Am I audible?
Hello, Gupta ji.
Yeah, hi sir. Just a couple of follow-up questions. Sir, can you provide more details on the current working capital position across both B2B and B2C operations, like including the average cycle days, cash conversion metrics, and inventory level observed in the quarter, which was quarter two, and also outline the targeted improvements that you are aiming for in each segment, like specifically what operational levelers such as supplier term alignment or cash sales, app-driven inventory reductions or fulfillment efficiencies will help compress the cycle, and how do you expect these changes to impact liquidity or partner economics and scalability over the next 12 to 18 months?
Sure. So I have my CFO Lokesh. He's sitting with me. I would like that he answers you.
Hi Vivekji, Lokesh this side. I happen to be the CFO of Sastasundar. So your question is more of on working capital efficacy for both B2B and B2C operations, right? So to summarize your my reply, as of today, we have common procurement and warehousing process for both B2B and B2C operation. So we collectively maintain an inventory of 30 days for both B2B and B2C. And my payable cycle for vendor is somewhere around 21 days. Besides this, we maintain a receivable period of somewhere around 6 to 7 days out. Yes, this receivable period is primarily for B2B customers, wherein the retailers take somewhere around 3 to 4 days, and besides this, around 2 to 3 days for B2C customers. So cumulatively, it adds around 6 to 7 days for my receivable. So my working capital period falls between somewhere around 20 to 25 days, as you might have noted on the PPT. And going forward, this figure is going to improve only from here onwards. Currently, we are maintaining 6 to 7% of working capital on our revenue. 3 to 5 years down the line, it would add an improvement of 50 basis point to 100 basis point year on year, and this would be brought down to somewhere around 3 to 4% from here on.
Okay, sir. So when we compare with competitors such as Entero, which reports strong margin performance, and Medplus, which has built the scale through its retail footprint, how does Sastasundar positions itself competitively? Like specifically, could you elaborate on the key differentiators or moat that protect your business model?
So two business model, Entero and retailer sector are absolutely different models. If you see the Entero's return on net worth, that makes around 9%. So from next 5 years, we estimate that 90% will travel to maximum 12%. Here is the company retailer sector which target for 50 to 60% ROC, is a very less capital. If you see the capital deployed in Entero and the Sastasundar model, if you see the model, that total capital deployed and return on capital employed and cost of capital divided by revenue, then you will see the retailer sector is double efficient the company. And then that credit scale are very, very huge. So 60 days credit is factored into gross margin. So if you see the gross margin without giving reference to the capital employed, then that is not the business we are building. We don't want to build a business with a 12% ROC because in that case we would like to invest our capital into BSE 500 companies which give more return or return to the invested capital. We want to build a company which can make capital double every 2 years time frame. So that is how the platform business we believe in. And from efficiency point of view, from gross margin, that should be compared with the giving effect of the capital deployed in the business and the margin of the retailer's credit. So if you give the credit to the retailers, then you get interest of that capital. So that is not exactly gross margin, but the interest on your borrowed lended capital in terms of inventory supply.
Okay, sir. Thank you. That was from my side.
Thank you.
Thank you. As there are no further questions, we have reached the end of the question and answer session. I will now like to hand the conference over to Mr. B.L. Mittal for closing remarks.
So thank you very much, my dear fellow shareholders and potential investors. I thank you so much for your present hearing, giving me opportunity to understand. Thank you so much.
Thanks, everyone.
On the behalf of Sastasundar Ventures Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.